Okay, good evening, everybody, or good morning, everybody. Depends upon where you're at. To a special edition of actually 2025 markets up to date and what to foresee in the future. There are times in which I see things that are not necessarily clairvoyant, but there are things in which markets get to the point to where we see things a change of behavior to what happens. And I start to see that a little bit now in market-wise. And I want to make sure that we're all kind of aware of things that go on. Because I don't want to be in hindsight. I want to be in foresight. And I'm gonna go over several charts. And one of the things we always look for with trend is change of character, change of behavior. And when we get that, we always wait for the cause, distribution, or accumulation, whatever the case may be. We're always waiting for something to occur after the possible change of behavior or change of character. Generally, we get that it's just a continuation of trend after a correction. In this case, the stock market, every time we've had a break, we've gone up and made new highs. And one of the things that we look at is that there are two ways that we could top out a market. One is through the climactic behavior of the market, and two is a situation to where you start to get long liquidation that eventually leads to supply. So there's climactic crescendo of people buying to an end, and sometimes the market just kind of turns over to the long liquidation phase. They can kind of look the same in a sense, but because markets get overbought so much. But we have to get to the point in which we see things for what they're worth and for how markets behave. So in this case, you look at the weekly chart of the S&P, and if you can see, I'll think of reactionary lows. If we get a reactionary low, anytime you see volume that occurs in the markets, high volume towards the end of the move, there's generally some type of climactic behavior. When I talk about climactic behavior, I'm not using buying or selling climactic per se, but climactic action is ending a particular market. In this case, you can see the market coming down, and you get this volume that's consistently. So this area here, every time you see high volume and large range, there's always a transfer of risk. That transfer of risk doesn't necessarily mean anything in the short term. It could be longer term, or it could be something short term. But anytime you see a market that has that particular behavior, volume, and price, there's a change of character because the funds and the specs as well as CMs involved. Once that occurs, in this case of the down market, since we're going down, the buying has to overcome selling. So the last selling bar that we get coming into the market is it's got a high volume, is an area where buying has to eventually come over selling. Okay? Now, in an uptrend, we don't need the size strength. We can do that for the absorption process. In this case, you see it perfectly. And what do I mean by the absorption process? You come back down, climactic behavior, buying has to overcome selling here, and you look at the background, it's weakness, and it does here, and you see the high-end closes. The high-end closes generally it's after cause build. It's not that quickly after the market has little cause, but in this case, the market's going through this transitional phase. These high-end closes was short covering, but it looks like absorption. But what's interesting is that buying overtook selling relatively quickly. You see buying overtaking selling that quickly, it just means that the market that's so undervalued that the market of the selling action, it was really not that significant. It just went through the market just breaking back down. So in this case, the buying over selling happened so quickly because it was just a matter of it was so undervalued, so oversold per se, that the market just went through a transitional phase. Anytime you see that large volume and large range comes in, you try to find the reversed trend line to go with it. In this case, we don't really have one. You can't really take that one, but that's on the lows. It would have been this one here, which we never retest the third time down. So that's pretty typical to what happens, and that's all well and good. We don't necessarily need the reverse trend line, but that's fine. We get the absorption. We get about 3 or 4 bars above the buying over selling in this case. It generally means that the market will not retest the market to higher. it won't be a situation where it's more of absorption versus the upthrust. So we maintain above the selling level. We're talking about rule of thumb, like 3 to 5 bars. Generally, the market won't upthrust. It's not necessarily a rule. It's just the market it has a situation where the market just clearly gets to the level in which it's above the resistance area so much that it's not upthrust. Upthrust usually takes a couple bars to do that, usually about 3 to 5 bars. If it doesn't do it, the odds are that it won't do that. Okay, so that's very important. Kind of rule of thumb, kind of look at. You can tell by market behavior, obviously, but in this case here, you see that the market generally acts okay. Market runs up, market runs up, market runs up. This is typical of a shakeout, climatic action, transfer risk. The market goes slightly higher. Now, as I said, you need to see change of character or change of behavior to markets. In this case, we have a market here that's going up, and we're looking for large volume or range bars. So this is okay, and we get this. This is more long rotation in the market. It could be a situation to where that could mean something, but obviously we're going to need the supply to come into the market. So I see that bar here, and I first see the selling bar. More so I see volume. It didn't have volume, but more so if I see the market have something of a wider range. Okay? I then will take my reverse trend line, and I'll take it from some reactionary high, and voila, I'll do this. So anytime I see the market have a down, a somewhat significant down, this is the largest down bar we've had since here. So that's significant. So I connect as many as I possibly can. I can make this even tighter, okay? It doesn't really matter. The fact of the matter is that the market got overbought. To be honest, I would draw this line here, because I would draw that line here, and that's what that would have been. Okay, that's the proper reverse trend line that we're going to use on the weekly E-mini S&P. Okay, so let me label this so you guys reverse it. When you go back to it, you'll see. I'll put weekly ES. Okay, now here market goes up, but this is not the absorption process. So anytime I see a market that gives me, if this has more volume, for sure, but because it's the largest bar down, I'm going to also draw this line across here. Okay, so the market does go up and retest it. The market doesn't form. The market doesn't form short of thrust, comes back down, and then we have cluster closes. So these low end closes, 1, 2, 3, 4 closes. So far we didn't get this done yet. 4 closes tells me the potential of that reverse absorption. Now, reverse absorption can take you down from the long rotation, but it also leads to supply. Okay, so let's go to reverse absorption. We'll do the question mark because we don't know yet. But this is why I want to do the webinar, to give you an idea of what's happening. Okay. Very, 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 very important. So we came up the overbought condition with a shorting upper thrust. Came back down, low end, and what we're looking for is the high volume bar, right? The high volume bar that occurs to the market. Okay, so the high volume bar that occurs to the market. We put that across. The high volume bar is right here, and I'll mark that as a particular low to what happens. So that will be our first area on the weekly basis. At this 53, at this, what's that, 65, 68, that you'll see a lot of, that's what wyckoff described what market potentially could mark down. 65, 68. We're going to put that as our reference point for us. These are live. This is not hindsight. This is going into the foresight of the market. Market back down, and reverse absorption, and the weekly chart is ominous, especially if we're getting a supply that may come into the market. Okay. So the weekly basis, low end closes after cause. If we get under this level, you'll have 1, 2, 3, 4, 5, 6, 7 bars or 7 weeks of the market that can look negative to the market. So because the cluster closes after the overbought condition, it can lead distribution if we get the long liquidation market. Okay. So you want to see, so right now the market is not bearish, but we're looking for the long liquidation on the potential supply that can come into the market. Okay. We're not there yet, but the low end closes kind of triggered the market. We'll see what happens. Okay. So watch the area here. Watch 65, 68 area. It could do it by reverse absorption to the downside, kind of bleed itself through, and then give the supply. If the trend is to change, you ultimately need a sign of weakness to the market. Sometimes climatic action happens over a period of time, days or weeks, not necessarily one bar. So a whole set of bars could lead to that. Generally, we have several bars that we do that, but not always. Okay, so we'll watch this closely. We now go to the daily chart. And as we go to a little smaller time frames, we see, if you recall the last couple of weeks, I've shown the 240-minute chart showing selling bars. So some small bars, the smaller time frame you get to, it will show more of the potential distribution process because they show up with more bars. The monthly bar shows up once a month. The weekly chart shows up every week, right? The daily chart every day, you get more bar action to make a decision. Well, in this case, we have a situation where the market's a daily chart. Take away our lines, and we have this bar here that corresponds to high volume. We want to mark that. Since the market came off the bottom, I do want to use as reference. I do want to use the low in that bar. This is a general form of trading range. Again, these color bars on the right-hand side. It's not a lot of cause that's built on the weekly chart. So yes, buying does overcome selling, but because there's some type of possible change of behavior bar here, it could be, look at it this way, this could be something like preliminary support, preliminary supply in the buying climax. So this could be just, we have to label it after the sign of weakness, right? But so we could put this as preliminary supply, right? Which can lead to the buying